Today we're going to talk about the number one tip that can save a new trader's account. Robinhood accounts. I mean, many of you might have one. We've gone from 1 million Robinhood accounts to 10 million in the last couple years. And a lot of these new traders ignore this one rule. And today, I'm going to save you from breaking it. Hey everyone, lead trainer with StocksToTrade, Tim Bohen. Be sure to like, subscribe, ring that bell, and share with your friends to get notified as soon as I go live. Also, if you're looking to take your trading to the next level, check out the Steady Trade team. It's a mentorship program where I work with Mike Huddy, Kim Ann Curtin, and a growing team of traders going over the nitty-gritty, getting into the real stuff that you need to know to become a consistently profitable trader. Check out that Steady Trade team. We've got over 2,300 webinars, 2 webinars a day. It's the best way to shortcut your path to success. All right, so today we're going to talk about the number one thing that I see many new traders fail at, and it really helps contribute to that 90% failure rate we talk about over and over again. Most of you probably hear that. Maybe your mom, maybe your dad, maybe your wife, maybe your brother have been like, why are you day trading? Everyone loses, everyone fails, particularly in low price stocks. And I'll tell you what, I agree with your mom, your dad, your brother, or your wife in low price stocks. 90% is probably low when it comes to penny stocks. It's probably more like 99% fail. And it's because of the simple reason that people don't understand that these are strictly what we call trading vehicles. Okay, listen, they're stocks, just like penny stocks are a stock, just like Apple's a stock, just like GE is a stock, just like Berkshire Hathaway is a stock. They're all equity investments in a company. But penny stocks aren't the same as Apple. You can't buy and hold and hope and swing trade or long-term invest. You have to know that these are strictly an opportunity to grow your account, to make money, to become a consistently profitable trader. The number one example I want to talk about is something, if you're on a lot of the daily briefings with me on the YouTube channel, definitely, again, be sure to subscribe because I go live every single day doing the daily briefing, the pre-market prep where we get ready for the day. But if you've been on there, you know that maybe the number one stock I love to hate is JCPenney, okay? And I think, listen, for justifiably so. I mean, JCPenney has been a failing retailer for years, and then the shutdown just made it worse. But what happened the other day is the headline hit, okay? And this is where many Robinhooders, new traders, make the mistake. They see the headline hit. They see that Simon and Brookfield, Simon Property Group, Brookfield Property Management, 2 big hedge funds. They're coming in to rescue JCPenney. And what happens is the stock starts to perk, starts to show up on everybody's scanners. You get the Twitter pumpers, you get the chat room pumpers saying it's going to $1, saying it's going to $10, saying it's going to $100 or whatever. I mean, you can see as recently as this spring or even last fall, JCPenney was $1 stock. So everyone starts saying, oh, it's going back to $1. Here we go. Buy, get in now. And because they believe in the idea. And you can't believe in the idea. I don't care if a hedge fund is getting in this. Most likely, they're probably going to delist the equity anyway, and you'll just be stuck with nothing because they'll probably take it private. If they take it private, they'll probably do it at an extreme discount. They'll probably take it private at 10 cents a share or something, and you can see the stock spiked up big. It spiked up big. The news hit right here. Let me zoom in. News hit at 1:15 p.m. Yesterday, and you can see the stock proceed to go from 21 cents to 40 cents. So it doubled in a couple hours. Awesome. Great. If you bought the news and sold the spike, you're not part of the people I'm talking to today. What I want to talk about is the people that believed it, and especially the people that thought this was a multi-day hold, thought that this was an investment, thought that they were going to get rich, they were going to double, quadruple their account. They believed the story. So you can see, keep in mind, it's an OTC pink sheet, so it doesn't trade it after hours, and it barely trades in pre-market. Stock gapped up huge, 80 cents. Everyone that bought at the close yesterday is like, here we go. I didn't have to use a day trade to overnight this. Here we go. We're off to the races. We're off to $1. And you can see stock gapped up to the 50-cent area, which is a huge move. Proceeded to go as high as 80 cents, but then just got destroyed. Went red on the day. Is barely managing to hang on to the lows right now. At the point I'm recording, it's 2 p.m. There's zero volume on this stock. It is deader than dead. But what the new Robinhooders do, what the new traders do, they bought at 40 cents yesterday. Stock's trading at 30 cents today. They saw it go to 80. They believed the story. They believed the hype. And now they're going to hold and hope. Keep in mind, what did they have? What did they have? And this is the biggest lesson I want to talk about. They had a 100% gain. So you bought the OTC gapper. We talk about these OTC gapper setups all the time. You buy a strong OTC stock with news on high volume into the close, they tend to gap up, which is exactly what JCPenney did. Opened at 55 cents. I mean, this is a 40-cent stock. That's a 20% gap up. I think it was an 18% gap up at the 9:30 open. Then proceeds to run to 80. You're looking at 100% profit in a bankrupt company, bankrupt JCPenney. Okay, there is no hope for JCPenney. Okay, and if you work at JCPenney or if your relatives work at JCPenney, I'm sorry. They should be sending their resume out. You can't believe in these stocks. And when you're looking at 100% or more, I mean, if you bought it when the news hit right here, let's say you bought it 25 cents, you're looking at a 300% profit if you sell it 75 cents. Say you got lucky on that entry, 300%. That is the mistake I see so many new traders make, whether they be on Wall Street Bets on Reddit, whether they be on Twitter, whether they be on whether they're in a chat room. They don't have realistic expectations. They don't look to take singles, doubles, the occasional triple, or hell, again, if you bought JCPenney as soon as the news hit, you had a home run. You had a 300% profit. They get greedy. They want more. They look at that previous chart and they're like, oh, hey, JCPenney, this was a $1 stock 9 months ago. It's going there. They believe the hype. They don't recognize that they're trading the worst stocks in the world, trash stocks. And that's a compliment, by the way. Doesn't sound like a compliment, but I mean it. Nothing moves like junky stocks. Nothing moves like these things. Apple isn't going to move 300% in a day. Okay? Google, Amazon, any Berkshire Hathaway, any of the Tesla, even when Tesla moves, it's never going to move 300% in a day. That's why we love these junk stocks. Stick to your plan. Have realistic expectations. Do not become a bag holder. You know who's a bag holder right now? The guy that bought right here into the close, didn't take profits, and he's still holding right here. And sure, he's only down 10%. That's as of right now. It's going to get worse today. It's going to get worse tomorrow. By the time you watch this video, there's a good chance JCPenney is trading at 10 cents a share. So let me know in the comments below. Have you been stuck in one of these? Have you fell for that trap of believing the headline and believing the hype? I know if you got a Robinhood account, I know you guys love bankrupt stocks. You love the Qs. Okay, remember that's what the Q denomination on a ticker means. Bankrupt stock. Hertz was one of them. We've had a ton of these, but they all die. And that's what I want to bring you to you today is recognize, I don't care if you're up 20, 30%, take those gains, grow your account over time. Don't look for home runs, because what happens when you have that home run mentality is you strike out a lot. And when you strike out in trading, lots of times you don't get another at bat. Okay. The nice thing about baseball is if you strike out once, inning later, 2 innings later, you get another shot. If you blow up your account becoming a bag holder on a bankrupt OTC pink sheet stock because you believed the hype and you weren't an agile trader that took realistic gains, you're done for good. You're retired. And now it takes you years to build up your trading account again to get back in the game. So learn these lessons. Recognize, especially when it's a bankrupt stock, especially when it's a retailer. I mean, things weren't good for JCPenney before the shutdown. They are in trouble. Be skeptical. Be analytical. Think these ideas through. JCPenney's not going to $1. It's not going to $10. It's going nowhere. Repeat. Recognize the news. Recognize the volume. Recognize the price action. And buy your OTC gappers at 3:45 p.m. just like JCPenney. But when you get the 100% gap from 40 to 80, you take that profit. All right, everyone. Drop me a comment below. Have you fell for it? Are you bag holding a stock right now? Let me know. Let me know the ticker. You know what I'm going to say if you are. My answer is always going to be sell it and move on, okay? If you're ever bag holding a penny stock, just give up. It feels so good. And I've been there. Trust me. I've been there more times than I care to admit. Nothing feels better than letting go of that bag, especially on a bankrupt OTC pink sheet. So, all right, everyone, be a trader if you're never an investor in low-price penny stocks, and I'll see you on the next video.